Good afternoon, good evening, and welcome to Traders Workshop, the show where we bring you NinjaTrader Ecosystem experts to help you learn more about trading. I'm your host, Tom Schneider, CMT with NinjaTrader, and I'm really excited to have my next guest back on. Great to see him, but before we get into that, I do want to remind everybody, futures and options trading contains substantial risk. It's not for every trader. You could potentially lose all or even more than all of your initial investment. That's why we recommend you use risk capital. What is risk capital? Money you can afford to lose, doesn't keep you up at night, doesn't extend your retirement horizon. I also want to remind everybody that past performance is not necessarily indicative of future results. And what we talk about here on this program contains neither trade recommendations nor financial advice and should be taken only for educational purposes. And with that out of the way, it's my pleasure, extreme pleasure, to have back on Sir Gavin Holmes. He is the head trader at Wyckoff Williams Investments Gibraltar Limited. I hope I got that right. More importantly, he's also an author. It's great that he's authored a book, Trading in the Shadow of the Smart Money. Gavin, how are you doing?
Well, lovely to be back here from my new home in the New Forest National Park, and welcome to you all. Lovely to be here. Yeah, a slightly different environment. I'm in a 17th century cottage in the middle of the New Forest. It's beautiful, love it. Absolutely delighted that I've moved, but really enjoying this moment in time as I write my third book. And yeah, you're right. I did write a couple of books. The third one's coming. It's taken a lot of time. But it's lovely to be with everyone and to show you some of these things today that are going on in the markets, because there's a lot of negativity out there at the moment, as we know, in the media and the press. And I can tell you that we're very positive, completely the opposite of what the media are. And, you know, we work with NinjaTrader, and we're very pleased that they're the same. You deal with people that are positive because you get positive energy from that. And what I'm going to show you today is some principles based on Wyckoff, and we'll talk about that in a minute, which show how accumulation and distribution happen in markets, and why the markets are going up and yet the negativity is desperately down. So all we see on the media is bad, but the opportunities are here and we must take them.
Well, Gavin, we're hitting on a lot of points right there. I just want to say, it sounded like you had a dream house before, right? We were talking, certain wildlife would walk by like it was, another day, like any other day. And now it sounds like you've moved to another dream house. It just sounds like, definitely a place I've only been to London, really. I haven't explored outside of the London area. So, to be able to get that experience that's more rural sounds just like a dream.
So the place where I live is in the New Forest National Park. I've got this new Ring camera system, which is brilliant. I like it. Set it all up. 2 o'clock in the morning, I was woken up by the alert. I thought, oh my goodness me, this is a problem. There's a burglar. And it turned out, as I switched the camera on, it was a pig. So this wild boar, this New Forest pig, came up to the front door and tried to get in. So the Ring camera picked it up. Now I've got this. I'll probably put it on YouTube at some point. But it's a lovely. This is a lovely place to live. But there are hazards, and the hazards that I try to explain to my kids is donkeys, horses, pigs. When I lived in Chicago, as you know, I lived in Chicago. That's how I met Cags and Mooney. Yeah, there were different hazards, but not in this forest. So we don't have the hazards. But it's a lovely place to live. And I'm blessed because I can trade and look out onto the forest and just be at peace. And it's really great. I love it.
Well, that's again, really, really nice. And you're right. Yeah, those animals, when they're wild, you don't want to be walking up to them and petting them because they won't reciprocate, right?
Correct. They don't. They'll bite you.
Yeah. So, well, great to have you back on, and I appreciate you taking the time coming on to Traders Workshop to talk about the Wyckoff method, right? And for those of you viewers who haven't seen Gavin before, maybe Gavin, if you could give a little bit of your background, how you got into trading, and how you discovered the Wyckoff method. It's a great, it's really interesting to hear that.
I'll keep it really quick because I know some of you will have seen some of the other videos. But yeah, I'm a former police officer, worked in the Met and Hampshire, left at La Force, got injured, started my own business. And fortunately, luckily for me, I met a guy called Tom Williams. And I'll talk about Tom shortly, but he was a former syndicate trader from Beverly Hills, California. He was born in Worthing. In fact, he was born in Wales, went to Australia, came back and lived in Worthing, but he decided by pure fate, really, to move to Beverly Hills. And through that meeting with a very big syndicate trader there, he decided to learn to trade. As such, he became a chartist, which is what I've become. And that means we read charts. We don't listen to news and rumor and stuff. We just look at the chart, as I'll show you today. So you look at charts, you look at the volume, and volume is going to be the key part of it, which I'll show you. But he then met me, and I sat with him for the first hour of our meeting, the first time I met him. And it was a life-changing moment for me, by far, because I didn't want to give him the time because I was too busy. And he was talking about charting and, price bars and all of this. I had no clue. Best thing I ever did. Changed my life. So I then became very good friends. And then as I became good friends, my father passed away in 1999, and he became my second dad in effect. And he said, I'm going to teach you how to read charts, Gavin. And I said, okay, what does that mean? It's like reading music. And that's how he described it. He said, if you can't play the piano and you get a piece of sheet music, you can't read the music, right? Because you don't know. I said, that's true. He said, well, I'll teach you to read a chart. And that's what he did. And from that moment on, not only did I meet my wife, and my family have been born through this, but I thoroughly enjoy teaching people the truth about the markets and how they really work. And if you understand volume, which I know Tom and I know Jim does as well, and I know Jason's here as well, the key to the success of any trader is to understand what the markets are. And they're very simple. The markets are marked up and they're marked down. Mark down, you buy. Mark up, you sell. Today, I'll show you that.
So really, really great explanation. I've always said that volume is almost as important as price action, right? I think a lot of new traders neglect volume completely. They don't know. They don't know to look at volume or what volume means when they're trading. They focus on the price. They focus on the indicators that are based off of price. And so much volume brings so much to the picture that people miss. I think that's, probably where the success comes from, if you understand volume more than say, just look at a chart for pricing alone.
Well, Tom, I think one of the interesting things about what's going on internationally right now in the markets is a lot of traders are looking at volume now, but they didn't do it before. But the Wyckoff method that we teach has been around for over 130, 40 years. I mean, it's not new. So when I talk to people who, are very experienced, they say, I've never heard of this, the Wyckoff method. I said, what are you talking about? I said, it's all over the internet. And it's becoming more popular. And that's why working with companies like yourself, NinjaTrader do a great job of educating people. Well, we're just showing you something. And I always say, as an ex-police officer, your mind is like a parachute. It's best used when you open it. Don't ever discount anything. If it doesn't work for you, it doesn't work for you. That's fine. Accept that. If it does work for you, use it. I found that in most of the things I've done in my life, even when I was trained as an officer, some things didn't work for me. I would never do that. And other times I would definitely do that. I would definitely take that. So with volume spread analysis, we must look, and I ask everyone listening to this video, use your mind like a parachute, open it, just don't disclose, just don't say no. Volume is price action. Yes, it is there. Price action, we're doing a webinar tomorrow on this. But volume is activity. That's the key to it. It's the activity of the big money. It's like the gorilla in the room. It's like the elephant walking across your yard. If an elephant walked across your front yard, I can assure you it's going to leave a footprint. And we, as I'll show you today, through NinjaTrader, with the platform we've got, can show you how to follow it.
Well, Gavin, I think I'm going to have you talk to my 10-year-old when he doesn't want to try something at dinner. He's very picky with his food, and I think you've just convinced me that he needs to listen to you instead of me. I think it's very convincing what you said. Open your mind, open your palate. But yeah, let's get into the charts. I think is probably a good place to start. Or do you want to explain the method before we do that?
Well, we'll go to the charts because there's some accumulation going on in the Aussie dollar right now. So I've got several charts to show people. I think that's an interesting point that you just made about your child, because again, I've got children. I've got three, and I try to teach them about belief systems, and you know what you believe is what you become, really. And in trading, that's very true. So if you accept that you are what you believe, then suddenly something happens. Now, you try to tell a 10-year-old, you know this, or a 12-year-old, oh, listen, you've got to be really positive. Everything's going to be good. Everything's going to be fine, right? And they go, yeah, rubbish. That's. I went to school. I went through the same process, and you go, you know, my dad would tell me, don't worry, it's all going to be fine. And I played football and I played rugby and I did all those things. And I used to get beaten the crap out of, but I still persevered. And there's a great saying from Bear Grylls, if you know who he is. And I will say this in trading, it's so true. Never give up. Never give up. Because the brain is very easy to say, okay, I throw my hands up, I'm done. But in trading, I found it. I've lost money. I've lost a lot of money. And it's not been an easy ride. Many times, I'm sure Cags knows this as well. I found it very tough, very hard. It's been a slog, but I got through it, and I'm happy, and I'm content, and I'm peaceful, and I'm joyful. And those things come from going through the rubbish that I had to go through to get here, and I'm sure we've never met Tom, but we will, I'm sure. Ultimately, life is attitude. That's how it works. And trading is attitude. It's not what we're going to talk about charts here. I'm going to show you accumulation. I'm going to show you distribution. I'm going to show the chart. But the key to success is in here. Okay. Everyone says holy grail. I've heard people ask me this. There is a holy grail. Yeah, you've got it. Everyone's got it. It's called us. And if we get this and we can read a chart, for instance, as I'll show you, you will understand the secret to success. Now, it's not the success. Well, it definitely isn't. Oh, I just read a chart and I make money. No, you have to apply what you're about to learn and understand it. And so I'm going to start. And can you see my screen here, Tom, by the way? So you should be able to see the screen.
Yes.
Right. We're going to start with volume. So we're going to get to that point first. What is it? Okay. What is this at the bottom of the screen? So this is NinjaTrader. Okay. It's a 6A chart of the Aussie futures contract. What's volume? What is it?
Well, if you're asking me, volume is the amount of contracts traded, right?
Pretty much. Yeah. I'll simplify it. It's activity.
Yeah.
It's activity. I mean, yes, the way you've put it is correct. but I would simplify it for anyone out there and say it's activity. So when I was first taught by Tom, he said, right, have you got some sticky notes? I said, yeah, I've got some sticky notes. He said, right, the first one you write is volume equals activity. Stick it on your screen. I said, well, why do I need to do that? I don't know. He said, just do it. Just put it on there. Volume is activity. Right, okay. And then he looked at me, he said, activity is volume. I said, no, it's one or the other. He said, no, it's both. It's the same thing. So I then stuck it on the screen. He said, now, what are we looking for? Gav? That's what he used to call me, Gav. What are we looking for? I said, volume? He said, no, activity. I said, oh, right. He said, but it's volume. So it's the same thing. So when you get the big footprint, which we can see here in the Aussie, it's activity. Someone is, some group or groups, we don't know, because that's the greatest question I always get asked at seminars. So who is it that's doing that? I don't know, because I don't have a clue. But I mean, I'd love to say it's Goldman Sachs, it's JP Morgan, it's HSBC. I mean, I've got a pretty good clue, but it's activity. So we've got a down bar here, clearly on massive volume, and it's got a green indicator in the VSA software. Now, anyone using a stochastic, and this is you can see quite clearly the time frame, 30-minute chart, but it comes down. Every stochastic, every moving average, anything mathematical is going to say, get short here. It's high volume, it's coming down. But we've got green indicators all the way through here. Now, what do those green indicators mean? What do they mean? Well, it doesn't matter what they mean. You just left click on them. And what happens here is we get a description written over 30 years ago by Tom and then improved upon by Philip Friston, who's a former fund manager. It just described to you what's going on. And Tom, you know, I lived in Chicago, so people, when I went, CAGs will tell you the same thing. I walked in the office, people would walk in, I walk in, they go, what's going on? Hey, what's going on? No, I don't know. Nothing's going on. I've just walked in the office. Nothing's going on. What's going on? What's going on? And then I figured it out. It's just a saying. But at the end of the day, if they said, hey, what's going on? I'd be able to tick the box and say, well, I had a good day today. Yeah, because I had a shakeout. Right. So you get this description, and it's there based on Tom's work, Philip's work, Grigory Margolin, our Chief Technology Officer. It's based on the work that they've done. But what it does, Tom, is it explains why something's happening in the market. That's the key thing. Now, I mean, obviously, I've followed a lot of your stuff on Ninja, and you do a great job. When you talk to people about volume, how many educators actually teach this? Because I'm a bit shocked that very few do.
Well, you know, in terms of what we're seeing on the screen now is you know, what is a shakeout, and you know, the price with the volume. You know, I don't see a lot of this. And I don't see, what I really like about this is the explanation. You know, it's one thing to see an indicator on a screen, and I've seen so many indicators on a screen with arrows and different colors, and but to have the qualification of those indicators, why is that there, and have it explained, I think is really kind of next level stuff. I mean, you know, to see how many indicators. You've got red arrows pointing down, you've got green arrows pointing up. They're on different colored bars. There are different types of volume happening if you compare to the volume chart. So to be able to, you know, basically this is I won't say a cheat sheet, because that's not really what it is. It's an explainer, right? It's a quick way. So I don't have to do the thinking. It really, I don't have to memorize and put it together. I can understand what is explained to me through that. Not a lot do that.
So that's a good point. And now what I want to do is show you something that's quite important to this. if you don't understand the Wyckoff method of trading, which was been around since the 1900s, early on, this is a phase of accumulation in the Aussie dollar. Okay, it started here and then it moved here, but these two signals here, stopping volume, and then the most important one, the test after a shakeout, is a principle that's been taught to me for years. And it's an accumulation area at this moment in time. Now, we are right at the top of this area. If it breaks it, it's going to move up. That I'm certain of. If it doesn't, it's going to come all the way back down and retest. But I don't know this. What we can't do, what I don't do, is try to be too predictive about markets. What I do is trade what I see. And that is a key part of trading from my perspective and from VSA. Could you take a 5-year view, a 1-year view? Of course you can. We have a mechanism called Smart Center Pro, which is a professional version that we use in Wyckoff Williams Investments Limited, Gibraltar. And we use this strategy to look at the bigger time frames. So we don't have to just look at 5-minute charts, 1-minute charts. But for the sake of today, I did say we'll look at a small time frame because I thought that would be more interesting to the audience. But does this work in big time frames? Of course it does. It has to. Because what we are charting is 3 universal laws. Universal laws, just like gravity, right? They're 3. Supply and demand, cause and effect, effort versus result. That's what we do. We're not interested in mathematical formulas. We're not trying to be predictive, even though everyone said, well, I want to be able to predict the S&P next year. We can certainly look at monthly charts, and we can certainly look at gold and silver and all those things. I can show you them very briefly. But ultimately, we're looking to trade what we see. Now, some of you will say, I trade the E-mini S&P or the NASDAQ or the Dow on a 5-minute chart. Does it work? And of course it works. It has to work because we're looking at supply and demand. We're not charting something that's mathematical. And that's the bit that confuses. So what I'll do now is we'll put up Smart Center Pro. Now, this is the version I use for trading in Wyckoff Williams. Now, what you're going to see here is the professional version that's built into NinjaTrader. Now, what you're going to see is we're scanning. Okay, so we can scan 25 instruments in one version of the program. Okay, I'm only just selecting a few just to keep it simple. So here, I've deliberately gone for an investment strategy rather than an intraday strategy. But there is intraday timeframes that we can use. So we can go down to a 1-minute chart. We can do a 3-minute, 5-minute. It really is straightforward. But from a long-term perspective, which is what I want to touch on today, in NinjaTrader, you've got various options of data feeds. Okay, so if you're looking at trading long-term, you can get various options on data feeds, which some of them are free. But overall, the data quality in NinjaTrader is superb. That's why we're using it in Wyckoff Williams. Secondly, the most important part for me as well is the support. Now, I've been asked a lot of questions about this, and I know some of you are in the room. Yes, I do have a live account with Ninja, and yes, their support is excellent. But ultimately, I know it's a big, big world out there with lots of people competing and saying this and saying this. This is what I'm showing you today. This is a NinjaTrader chart. It's the 6A, and then I'm scanning all of these instruments at the moment. But I'm looking for investment positions for the fund. I'm not looking for short-term scalping, okay, right now. I will do that, but I'll need more than 45 minutes to do it because that's not going to work. And probably the timing wouldn't be right. We 5 o'clock in the evening, UK time is not a great time to be trading scalping. So we'll work on that one. But let's look at some of these charts, okay? And we'll go through them individually. And I'll just go through, well, the micro Bitcoin, that's a great chart to analyze, but that's separate. But we'll do crude oil for the moment. Now, what we can see here, ironically, because energy prices are going through the roof, what you would expect to happen here is that the energy and the oil price would go up, but actually it's been going down. And I know that because I just filled up my car with gas. So what you're thinking and what you're hearing is not reflected in the actual chart itself. So what we then do is we can go to a crude oil chart very quickly, and any of these charts that we look at will show a similar situation. Because if you look at energy prices right now, everyone's saying they're going to go through the roof. But actually, it's not the case. And you'll see this, and you'll see it very clearly when I show you this chart. Now, I'm going to show you gold as well, because some of you have asked that. But let's look at crude oil. Let's look at the volume. Okay, this is a weekly chart of crude. Okay, now, again, I'm conscious of time. I don't want, because I know there's going to be questions. But this is called an upthrust. Okay, this is a deliberate move to lock in traders to the long side. Now, it's clear it's red. It's called SOW. It's not a female pig, despite we have many of them here. It's definitely not a female pig. It's a sign of weakness. It's an upthrust. It's a breakout to the upside after lots of good news that energy is going to go through the roof because of the Russian invasion. But then here, over to the right, we've got selling pressure. Now, notice two things. This is very important, what I'm about to teach you. Look at the range of the bar here, the spread, and look at the spread on that. Notice how it narrows. Okay, it's very narrow. Now, that's because a group or groups or big money is capping the market here. So every buy order that's coming in, they're satisfying it. How do we know? The next bar closes lower. This is completely logical. This is not rocket science at all, and that's why it's falling. And then, of course, here we've got what we love to see in a downtrend. After weakness, no demand. This is all scannable. We scan for these in our system, and it tells you it's there. So when I was doing an interview with a bank a few weeks ago, and I won't say who the bank is publicly, that wouldn't be right, but I did the interview and they were saying to me, right, okay, so what's your view on crude oil? Because it's bullish, isn't it? It's bullish. I said, no, it's going down the toilet. They said, no. We've got the desk tells us this. I said, you can say what you want. Crude oil is going down, and it will go down to 30, and it'll probably get lower because the spring happened down here. That's where the buyers came in. It's called a shakeout. Look at the volume on it. That was, I think, when Mr. Putin was already saying he was going to invade Ukraine. That is the volume. That is your elephant in the room. That is your elephant in the opposite side. Okay? It works. Supply and demand works. If you understand it and you read it, and it's programmed into NinjaTrader, and I'm using Smart Center Pro, which is what I use, but some of you will use other systems using volume. There is the buyers, there is the sellers. And the chart doesn't lie. It never lies.
And so, to be clear, this is a weekly chart.
Yeah.
So our time frame is an investor's time frame. It's a longer time frame. And so that price that you mentioned of 30, which it could go down to, is a longer time frame. It's not something that we're looking at as day traders in the foreseeable future, but you're talking longer term investment as a possible target.
Years. Yeah. I don't. Let's be clear on this. One of the things that happened back in 2011, it's on YouTube, when gold was going to go to 2,500. I went on YouTube. It's on YouTube. You can go and check it. And I said gold's going to go down to about 1,100. I think I said. but it took 3.5, 4 years to even get anywhere near it. I'm not taking it. I'm showing you a weekly chart of VSA, but I'm showing you the proof here that you've got all the evidence. You've got no demand 7 weeks ago, and the price is falling. Okay, you've got the news that energy is, people can't afford to heat their houses. Okay, so you've got all this bad news. On bad news, then suddenly, or good news, they say, well, actually, everything's going to be fine. Don't look at the news. Look at the chart. Look at the chart. If you're a trader, because the chart doesn't lie. And I'll give you another one just very, very quickly, because I know there'll be questions. But we look here at the 1 minute chart of gold. Okay, so we're looking at gold, right, on a very small time frame. Okay, and I'll just move it all the way forward to the right edge of the chart, because we got a very high volume footprint here, which is there. Okay, right here, and that's at the London fix, bang, and then it just continues to roll, but it hasn't gone up. So now what you do, we go to another time frame. So I go to a 30 minute. Okay, now look at the volume that's come in. Okay, that's a warning sign. It's not telling you to do anything yet because it's being marked up. But what I do is I use Smart Center Pro. So what I'm going to do, this is a completely in NinjaTrader, so you can see it. I've got all these scans. So I'm going to say, well, I want to find a trade in any of these instruments. So it doesn't have to be gold, but let's say it's gold. So I put across here, left. Now, when these change over, now this is a daily chart, so we're looking at long-term time frames. So this, I would use much smaller ones, but these are all adaptable. So you can have a 1 minute, 2 minute, 3 minute. But for the purposes, once it changes and everything starts to roll, it sends you a message when the market has changed behavior. Now, I want to quote from the words of the late David Weiss, W-E-I-S. Some of you will know him. Get his book, Trades About to Happen, because he taught me the most valuable lesson I've ever learned in market behavior. He said, you wait for the change in behavior. What are you talking about? What do you mean change in behavior? He said, the market is, it's like everyone's human. They're all trading it. Change in behavior. I said, well, what you're looking for, if it's going up and up and up and up on these small time frames, the big ones, you don't want to short it because you're going to get killed. But if it changes behavior on the 1, 2, 3, 4, 5, and then the 1 hour and the 4 hour, and it rolls, it's changed behavior. Now, if you short it at this level, you're swimming with the tide. You're jumping in the river and swimming out to sea. It changes behavior. That was the greatest lesson I've ever learned from any individual trader in my life, because it's exactly what I made mistakes on. I would try to pick the top and go, ha ha ha, 5 minute. This is an up thrust. I've got it. And then it kept going up. And then an hour later, I go, oh, that's an up thrust on the hourly. And I got killed. Patience, Tom, patience. And it works. And so that's how it works. And we can look at any other charts if you want to, but all of these show the same scenarios. I mean, the euro for me at the moment is one of the best ones, because I reversed a short and went long, and it does work. So Tom, questions, because I know we're running out of time a bit. We've got 10 minutes.
Sure, right. So question we have, and if you want to participate in the chat, you can go to ninjatrader.com/events. Hit the play button there. If you're watching on YouTube, we don't have the chat enabled. You can come to ninjatrader.com/events and drop in a question for Gavin. Mike B asks, how do you scan for no demand? What parameters do you use? So going back to the tool that you had where you were using the scan, how do you scan for no demand?
Depends what version of the software you're using, but again, it's it's very straightforward. In NinjaTrader, in Smart Center Pro, you can actually program in a specific rule set that says, after this, give me a setup for no demand. So in Smart Center Pro, you can do that. I haven't got time to show it, but we will show it. But for me, it's even simpler. The human brain is very intelligent. It knows what to look for. If you're a pilot, right, you're looking at a windscreen. Okay, you've got instruments. Okay, so pilots are not redundant yet. Although I have to say, my business partner moved to Ireland, to Kilkenny, and he's got in a taxi to go to Dublin Airport. And the fella said, right, sir. He said, what I'll do is I'll switch everything off and we'll just go automated. And he said, what do you mean automated? He said, no, the car drives itself. It was a Toyota. And I know Richard, he was pretty nervous. He said, no, can you get... He said, no, I'll be sitting here, but I'll be reading the paper. No, it's happened.
Not for me. Not for me.
No,
I wouldn't do that in a second.
I would have been said no, but apparently this happened. So the fella's like, okay, I'm just going to sit here. I'll keep an eye on the dashboard. And this car drove itself, I've done 50 miles to the airport. Wow. Now that's where we're at. It's that automation is there. Is automation available for trading? Yeah, we're close. But ultimately, I wouldn't want to be sitting in that back seat. No, it just wouldn't work. Because if I said, what happens if someone pulls out? Apparently the car can deal with it. But when it comes to finding a no demand signal, good question. In a trend, I like to still use the human side, the eyes, the ears. I love trading. I love doing these webinars. So to sit there and think I just press a button and sit there and watch it trade isn't particularly for me, but it's where the market's going that way in some ways. It's already there with HF, high frequency trading. So, but getting back to it, most traders don't have that capability and they don't have that size to trade, so they want to learn. So what is a computer good at? It's good at scanning. It's good at finding setups. It's good at triggering, meaning telling you, yeah, look at that 6E or that 6B or that, it's good at that. Computers are excellent at that. Whether we'll find a time or it could happen in my lifetime where it triggers the trade. So it says, oh, we found it, boom, we're going to automate it. And sometime it probably will happen. But when you find no demand in a downtrend, to answer the question, it's a very good trade, because what happens is the market's falling, it's collapsing based on selling, and then it goes up and the volume decreases, and we call it no demand. We have a signal. We have two of my favorites, 198, 199. They're numbers. As soon as they come up, Smart Center Pro sends me an email, tells me. So that is already there. And then it doesn't take the trade automatically. I then have to open the chart. Okay, no big deal. Look at the chart, analyze the chart, and decide, hey, guys, we're going to take this trade if it's for Wyckoff Williams, or I'm going to take it personally. But can it be done? Yes. And in NinjaTrader, it works brilliantly.
So, Gavin, that brings a question. When you open up the chart, you say, okay, there's this, let's say Aussie dollar is the market that was, you scan, you get this idea that maybe Aussie dollars, there's an opportunity. You open up the chart. Are you looking at anything else? Do you have any other indicators you look at? Maybe not to make the decision to trade, but maybe to help you not take a trade, meaning where else could other traders be looking at that you should be aware of? Not that, again, that you're making decisions to trade, but you say, well, you know what, this pivot level, this moving average, this something or other is an area where there might be a lot of congestion. There might be a lot of, going back to the price chart. Do you combine your signals a little bit?
So I do use other things. Let me be clear. So I don't discount other things. I use Fibonacci retracement levels. I use trigger numbers, which are areas of support and resistance. I use what we call trend clusters, which are unique to TradeGuider. It's built in. I haven't got time to show that, but they're trend clusters. So they're support and resistance levels. But other than that, I don't really use very much. because I believe that there is something that I've seen through most of the people that I've taught that causes them to lose money. It's called analysis paralysis. And this is a problem because what they're doing is trying to overlay too much onto a chart, and then and then one thing says that says that says that says that. Tom was probably the best person I could have ever met to teach me, because he didn't have any of that. He kept it so simple. In fact, when I first met him, I wanted to impress him. So I went to Waterstones, which is a bookstore in Worthing, and I brought all these books on candlesticks, stochastics. And I walked in with these books. I said, right, I'm ready to go. Here I am. He threw, I think I've told you the story, he threw them all in the bin. He said, he said, you know nothing, which is your best strength, because you don't know anything. He said, don't read that. He said, because you'll become part of the herd. And he called it the losing traders the herd, which I found quite insulting. And I said, well, when I went to Malaysia and did a presentation, they said, you can't use the word herd. That's very insulting, which of course I didn't. But what he meant was the group. And he said, like Warren Buffett said, same thing. And his mission was always that, to take people out of the group and put them into their own little arena to make money. And he did it. And he did it very successfully. In fact, well, clearly he did, because we've been going for the best part of 40 years. And we're working with you guys. And we're working with some very big companies. And we got a lot of interest in what we're doing. But the key to it is we're telling what we believe to be the truth. Now, of course, the truth to everyone, it's like a politician, isn't it? You go, well, I'm telling you the truth. It's what you take out of it and how you use that information to make yourself a better person. Forget the money. The money is part of it. It's a byproduct. It's making you as an individual a better person. And that's what I've learned, and that's what I teach, and why I thoroughly enjoy what I do.
That's awesome, Gavin. It makes sense. It's, eye-opening. I think there's so much more that I could read about it. One question I have, because I have looked at volume for many years, your calculation of volume, this is a great presentation, a visual. And I like the way the volume is presented here. I like the coloring, the color scheme. It's very pleasant. It's very easy to look at and know what we're trying to do here, right? There's volume that's above or below the average. Do you use the same kind of calculation for the intraday volume, just because of the volume spikes at the beginning and end of the day, or is it slightly different?
Well, we'll show you. Probably easy. So we'll just put a 5-minute chart up of the euro here. Okay, so it's the same thing. Okay, so you can see the weakness at the top, right at the top there. It's supply coming in. Look at the volume coming in here. It's falling. That's a 5-minute chart. I just showed you a weekly. How can this work? This was a great question that Tom, when he started doing the programming with Bob Harwood, the late Bob Harwood, he sat with him, and the programmer said, well, this will work on a weekly or a day. It never work on a 1-minute or a 5-minute. Can't work. And Tom said, well, it has to. He was insistent. So they programmed it. And the programmer went, oh, my goodness me, it does. Because it has to be the same, doesn't it? What we're charting, we're not charting mathematical formulas. It's supply and demand. There is your supply up here at the top. That's a buying climax. Okay, that's the mushrooming over. It's everything I've written in the book. It's the truth. If people believe it, then they will go, actually, that makes sense, because the euro is falling. But the red indicators at the top here, the green ones are not wrong. Look, the market goes up. It's not incorrect. You're charting supply and demand, cause and effect, and effort versus result. And that's what we do. As I say, we're delighted that we've partnered with you guys at Ninja, because I use your platform for our fund, and I love it. I think it's a really easy platform to use, and more importantly, the charting, the way it's frameworked out, is very easy to use. You can see it here. But do you see lots of trend lines on this chart? Do you see lots of things? What you have got quickly are these trend clusters. Okay. These are the things that are very powerful that I can't explain, but they're resistance lines. And that's why the market is refusing to go through them, because that is a trend line that's projected back thousands of bars into the right edge of the chart. And I'd love to spend an hour on that, but I can't. But it's trend cluster. It's a support and resistance line that looks at areas in the past where the market has refused to go through it, projects it out, looks at the weakness, and the buying climax is one of the strongest signals we have.
Nice. Gavin, I can't say enough. I want to say thank you, though, for coming and sharing your wisdom with us. How can people get a hold of you? And you mentioned you have a webinar coming up.
Yeah, I've got one tomorrow, but the best thing I would, well, my advice would be go to volumespreadanalysis.com and get, if you come here and you go to, I'll just put it up here, www, and you go to volumespreadanalysis.com, because this has got all the information you need, right? It's got a resource center, which has got my book, all the stuff you need. It's got the interview with Tom, which we couldn't play, we didn't have time. But you can then log into the database or become part of our database, which means that any NinjaTrader events we do, you'll get access to. But everything on here is free. There's no charge or anything. So you go to the resource center, you can get my book, you can get the videos. The other thing I would recommend, and probably would recommend, would be to go to the YouTube channel. Well, I don't even have to put that up. It's youtube.com/TradeGuider. And you can go there. So youtube.com/TradeGuider. And you've got all the latest information that we've provided recently. And we're doing another update tomorrow. So yeah, go there. That's the best place. And I just say before I leave, I want to thank NinjaTrader, and especially Cags and Jason, the team there, and obviously Tom for putting on these events, because yeah, it's time and it takes effort. But if we can change one or two lives because someone reads or sees this and says, actually, that makes sense, then we've done our job. I love doing what I do, as you can probably tell. And I know that Cags and I know Tom and Jason do the same thing. We do these things because we want to help people. Ultimately, it doesn't benefit NinjaTrader for people to blow out their accounts. It doesn't work. They want to support you, and that's why they do these events. And I'm always 100% behind them. And hopefully one day in the next 6 to 8 months or whatever it is, we'll do a live event in Chicago, possibly here in London, but we'll do one because there's a lot of interest, and we've certainly got the interest. So, yeah. So, Tom, thank you. Appreciate it.
Oh, my pleasure, Gavin. And yeah, I can't wait till we can meet in person, whether it's in the UK or in the States. We'll do that. And, just eagerly awaiting your next book. That'll be fun. So we'll definitely bring you on, and we'll figure out a date. Maybe it'll be around a book release. That'll be an incentive as well. But sounds great. And again, I could talk for hours, but thanks for coming on.
Cheers. And thanks, everyone. God bless and namaste, and may your God be with you. Take care. Bye-bye.
Thank you. And we'll see you at the end of the day with bars closing with Jim Cagnina. In the meantime, have a great trading day.